The bloodbath has begun. Alright guys, before we get into the news about XRP and Coinbase, go ahead and subscribe to the channel. I'm really trying to build this out, and I'm going to bring you all the related crypto news, unbiased, regardless if it's good or bad to any project that I'm invested in. And if you've watched any of the videos on this channel, then you know that I'm pretty invested in XRP. I still have high hopes, but obviously the news today kind of shakes up the community, so let's talk about it. So right now, obviously XRP is not trading to where we want to be trading. It's going to be trading at 24 cents, 24.4. Now, do I see this being concerning? No. The reason why we're spiking right now is because of this. So today, just recently actually, we got a tweet from Coinbase. So they say, given the SEC's recent action against Ripple, all XRP on the books have moved to limited, and Coinbase plans to fully suspend the trading of XRP on Tuesday, January 19th, 2021 at 10 a.m. PST. Afterwards, users will continue to retain access to their XRP funds. So it seems like they're still going to give the capability to hold your XRP in Coinbase, but they're going to be halting trading. I think that this is a very important move. I think something in the back end is definitely happening here, and I definitely understand exchanges, especially small exchanges, delisting XRP because they don't have the capital to fight the SEC or to potentially have any trouble come of anything that they're involved in. But in terms of a larger exchange like Coinbase, it's a little weird that they're halting trading, or at least halting trading entirely to XRP and not just the United States. Does it concern me for the ultimate use of XRP? Not really. So I just want to highlight this tweet from Credible Crypto. He tweeted out, as he mentioned in his video today on XRP, US exchanges delisting should not surprise. It's the international exchanges that bring 90% of the volume. And he's completely right. 90% of XRP's customers and on-demand liquidities happens outside of the United States. So really, the impact from the United States to XRP right now is more or less superficial and doesn't harm the actual use case that XRP solves. Now, that being said, if Ripple, the company, wasn't around anymore, then obviously XRP still continues to go on as a cryptocurrency. So really, the cryptocurrency itself isn't really in danger of literally going to zero. I don't think we will see that, not with a crypto that's been around this long. We've heard doom and gloom stories before when China banned Bitcoin. A bunch of people said that Microsoft and all these tech stocks were a bubble and people should get out, and people sold at a really high price back then, but sold out and miss out on millions potentially in the long run. So a lot of this is potentially a shakeout. Now, here's my thesis in the whole thing. Now, I do have a good amount of money in XRP. It's the majority of my portfolio. It's not a lot, but it's the majority. That being said, I know that I'm going to make a considerable amount of gains in the other crypto projects that I'm involved in with this year. So I'm not terribly concerned if I do lose my entire investment in XRP. But what I don't want to have happen is me selling at a low price and potentially losing out on what could be something big in the future. I see the use. I'm looking past all the FUD that people are giving, and I see the actual use that XRP solves. And I think it could be something really big in the future when we're talking about moving money around the globe. I think it just makes the most sense that XRP is used in this way. Now I'm going to go over two clips here of Charles Hoskinson talking about the Ripple suit. First clip was when Ripple themselves came out with their original statement. And then the next clip we'll talk about is a little bit after, when he's had time to reflect on the case and actually read the case, what the case involves.
If it gets to the Wells notice stage, about 4 out of 5 times they pursue an enforcement action. About 20% of the time they drop it, give or take. So anyway, in the show notes, I've included a summary of Ripple's Wells submission response. It's about 6 pages long, and they provide kind of a factual background and introduction. They go ahead and provide a little bit of an analysis with the Howey test, and then they kind of ended on some policy reasons why it would be problematic if Howey was applied. So there's a lot of stuff here. It's a pretty meaty document, and it's a very compelling response. So based upon the response that they have, it's obviously dependent on facts and circumstances. It doesn't really look like the SEC has a very strong case. The other thing that's incredibly puzzling is the chairman of the SEC is going to be leaving here towards the end of the year. And so basically this colossal, very high profile securities case would then be handed to an interim chairman starting next year in a completely new political administration. So it's very strange, very unorthodox, never really seen something like this before, and it's typically not done. They mentioned on-demand liquidity products. They mentioned statements from the DOJ and FinCEN back in 2015. They mentioned the unique node list and the validators, where the supermajority is not in the hands of the Ripple company. And it definitely is going to have an impact on the space as a whole if it continues its way through. So most likely outcome is that nothing is going to happen in the next few weeks. And if there is going to be a filing in court, that's probably going to occur January, February time horizon. And then this would be a litigation that would take potentially quite some time. It could be greater than a year to 2 years of effort. And it would definitely create regulatory clarity on what is a security and what is not a security. But according to things that the SEC has already said and done, and their statements they've made on Bitcoin and Ethereum, and the facts and circumstances of the XRP case, I don't believe that XRP is a security under those standards and statements. And it'd be quite problematic for the SEC to capture this under their definition, because it would inadvertently capture most of the cryptocurrency space if desired. There's really no way to satisfy it. And it's not clear how would you even operate a system. For example, if somebody was responsible for reporting, if the reporting entity goes out of business, the protocol and currency are still there. So then who reports for it? If Ripple was to be a security, then every US holder of XRP would be holding securities and actually in violation of securities laws themselves. And they would lose all liquidity in the United States, but then enjoy, because they've already been approved as a currency or another instrument abroad, different forms of liquidity abroad. So it's an incredibly puzzling case. It's quite bizarre. And just unbelievable to me that it would be issued right before Christmas, just a few days before the end of the year. And when there's a transfer of power from one administration to another, one group to another group, it looks like a bad decision, all things considered. So you guys should read the Wells submission, the counter argument, the summary that XRP put out, and if there is a lawsuit, we'll all be able to read that together. But nothing's going to happen in the next few weeks. It's going to take a little while. And this is kind of the final threshold before they file. As I mentioned, 4 out of 5 times when it gets to this point, they do. 20%.
So Charles Hoskinson, again, he is the founder of Cardano, very intelligent person. I trust a lot of what he says, and I think he's right in saying that there's something weird about this specific suit. Everything seems a little unorthodox. As one administration is coming in and one administration is going out, this suit is put into place, which seems very oddly timed right before Christmas. But Charles does have time to read the lawsuit that came out a day later, and we will see his thoughts on that and we'll discuss it.
It's definitely a very interesting, very unique case. It's not just against Ripple, but it's against two of the principals of Ripple, Chris Larsen and Brad Garlinghouse, the former CEO and founder and the current CEO. And when I read through the entire document, it blew my mind that it's not a 10b5 case, which would be securities fraud from what the SEC is claiming. So they request jury trial, and it's very clear that this is a heavy-handed enforcement action. This is not something that I think they're going to want somebody to pay a fine. The crux of the matter comes down to Brad and Chris. According to the SEC document, about $1.3 billion worth of XRP was divested over an 8-year period, about half of which to retail and about half to institutional, if the numbers are right. And Brad and Chris apparently got somewhere in the magnitude of $600 million personally. Now, whether you think XRP is a security or not, the fact that the principals of the company personally paid themselves $600 million and that it seems like the company sourced its substantive operations funds from the sale of XRP is the matter that is causing the sticking point, and what justifiably does piss off the SEC, especially given that the Ripple company is equity financed. And so it would be one thing if you had a large self-sustaining ecosystem where there's a lot of network value in that ecosystem, and you don't need a custodial entity for it to function, and you're equity financing a company to contribute, appreciate value there. It's another thing entirely for one entity to run the whole show, and then for that entity, when it has the option to use institutional investors, sell equity to finance the growth of their ecosystem, as they did as they were getting VC capital for their company, instead to choose to finance operations for the divestment to retail investors of an instrument. So this is definitely a big one, and it's a lot larger than I expected. At some point during its life, I'm sure a fair argument could be made that in 2012, 2013, 2014, those early years, that there were security-like characteristics to Ripple that probably could have made it a security. But that's probably was true of Ethereum, and it was certainly true of Bitcoin in the early days. And they have this concept of sufficiently decentralized that they've been kind of pushing around as a new standard. The crux of the matter is that there's allegations of, or at least a specter of market manipulation, a specter of a horse and pony show, information asymmetries, and evidence that the principals enriched themselves with $600 million from divestment. And these are the facts of the case that are brought out, and they're not flattering in any certain matter. So who the hell knows where this is all going to turn out? And the problem is that to get recourse and actually pursue an enforcement action under this model, it creates problems for the industry as a whole. It broadens the Howey test in ways that are not just inconvenient, they're dangerous to innovation in the United States. On the other hand, I can understand why the SEC would bring the suit. They'd say, if you guys believe so much in your ecosystem and you had access to Andreessen Horowitz and all this money in Silicon Valley, why didn't you just hold on to your XRP and continue growing your parent company through VC investment? And then once the ecosystem is sufficiently decentralized and broad and powerful, then go ahead and divest. Why did you pay yourself first, regardless of whether the ecosystem is great or not? And when you had the opportunity to use regulated smart money as opposed to retail money. So it's definitely not clean. And this is definitely is going to be a shit show for the entire industry.
So I think he's completely right here, and a lot of things should concern some people, right? The fact that Brad and Chris are involved in $600 million of sales of XRP. Ultimately, if they hold an asset like Bitcoin or any other asset, you kind of have the right to sell it for the most part. Now, a little bit of history. XRP was gifted to Ripple. But that being said, the people who created XRP created Ripple. So you can kind of interchange the two. You can't really separate them that well, even though that they've tried to really separate those two. Now, as Charles said, it seems like the earlier days, yeah, it did have those characteristics of a security. People were investing and going in, expecting that Ripple would build out the XRP ecosystem. So I kind of understand that. But the problem that Charles points out, and the problem that I came across when I was reading into the court documents and everything else and how they're applying the Howey test, is that that would apply to roughly 80% of cryptos out right now. There's a lot that I can just think of on one hand that their coins and the funding to their coins directly benefit the platform that they're working on. So realistically, I think a lot more tokens could fall under the security definition if that was used. Now, what I truly think is happening here is I think that this case is being brought to create precedent and to create some sort of framework to determine whether or not tokens are going to be securities in the future. Because regardless, this is a problem that we need to solve moving forward for the ecosystem of cryptocurrency. I'm not even saying this as somebody that's specifically looking at XRP. We need legislative clarity from the United States if they want to be a player in the fintech global ecosystem. Now, of course, if they don't, at the end of the day, money is going to flow to where it flows easiest. And in the aspect of XRP, XRP is deemed a currency in everywhere else in the world. So realistically, if the United States does deem it a security, at the end of the day, the use of XRP is still being enacted. And right now, I'm just thinking that the price is just going to be suppressed regardless of what's happening here. So the worst case scenario still tells me that long term, XRP is here to stay. It's not going anywhere regardless of what the US does. So really, I'm not all that much concerned about the long-term standards of XRP, but it is going to test everybody when they're seeing, as Blockchain Backer tweeted out, when they're seeing Bitcoin hit 20, 30, 40, 50K and XRP is still at 28 cents. What do you do? So that ultimately is a decision up to yourself. You have to make that decision for yourself. But that's it from me, guys. Go ahead and give me a subscribe if you liked what I brought to you today. I think I'm correct in terms of I refuse to get shaken out. And you know what? It's not enough money that I would lose any sleep if I lost it all. So at the end of the day, it's not that big of a deal. It's only money. We can make it up. So my personal strategy is I'm going to look past the SEC bullshit. I'm going to look at the tokenomics. I'm going to look at the use case. And I see that XRP has a staying power in the future. And I'm going to stick with that thesis and wait it out. Thanks, everyone. Happy hodling.